Hi everyone, my name is Adriana Natra.
My name is Situna Khadija.
We'll be talking about MFRS 8 operating segments using Sunbelt Beberhad as an example.
By the end of this section, you will understand what MFRS 8 is all about, how companies identify and report their segments, and how Sunderby applies this in their financial statements. Sunderby Berhad is a company with a long history, founded in 1910 and is currently listed on the main market of Bursa Malaysia. The company's main business segments include industrial, motors, UMW, and also healthcare. For one of its insurance arms, its vision is to be the preferred provider of insurance and takaful broking and risk management services, with a mission focused on continued financial stability and professional service delivery. According to MFRS 8 Operating Segments Pair 5, the standard requires a component of an entity to be reported as an operating segment if it meets three main criteria. Crucially, it must be a business activity that earns revenue. Its results must be regularly reviewed by the chief operating decision maker, and separate financial information must be available for it.
In Sunbelt Beberhad, the chief operating decision maker is identified by their function, which is to allocate resources and assess performance. The document indicates that the group chief executive officer, Datuk Jeffrey Salim Davidson, fulfills this function by reviewing internal reports monthly and conducting regular performance dialogues with the business units.
Hi, let's look quickly at Sime Darby's financial results for the year ending 30 June 2025. The company had a strong year. Their total revenue from continuing operations came in at 67.1 billion ringgit. When we look at profit, the total operating profit before interest and tax was 2.8 billion ringgit. Two divisions drove this success. First, the Motors division was the top performer, contributing 1.5 billion ringgit. Second, the Industrial division, which is the largest by revenue, added 584 million ringgit to the total profit. Overall, the results show strong operational performance, especially from the motors and industrial businesses.
There are two types of segmental report of Sunderby Berhad, which is operating for business and geographical segments. Sunderby organizes its segments into continuing operations and discontinued operations. The continuing operations include the industrial, motors, UMW, and others segments, each offering distinct products and services. Discontinued operations include healthcare and UKHE, which is UK heavy equipment. The full scope of their activities is detailed in the table, which comprises industrial segment, including sale, rental, and servicing of equipment, and engineering services, while motor segments, including assembly, sale, and retail of vehicle, while UMW segments, import, assembly, and marketing of vehicle, while the other segments, including insurance broking and general investment. For the discontinued operations, healthcare segments, including investment in the Ramsay Sunderby Healthcare Group, while UKHE, including importation and distribution of heavy equipment under the Komatsu brand.
In addition to operating segments, Sunderby also reports results by geography. Analyzing the 2025 data, Malaysia is the largest source of revenue and profit, reporting a profit before interest and tax of 2.206 million ringgit. Australasia is the second largest profitable region, with profit before interest and tax of 1.18 million ringgit. Notably, China reported a profit before interest and tax loss of 99 million ringgit in 2025.
Operating segments are only required to be reportable if they exceed quantitative threshold, which is more than 10%. To find whether the segments are reportable for 10% threshold, total up the external and inter-segment for each segment, then divided by the total revenue of all segments. Based on the 10% threshold test applied to the total segment revenue for the year 2025, the industrial, motors, and UMW segments are all considered reportable segments. Each of these segments contributes significantly to the group's total revenue, with motors being the largest at nearly 50% of the total segment revenue.
The second key test is the 75% external revenue test. This ensures that the reportable segments accurately represents the total external business activities. To find if the reportable segments are at least 75%, we can use formula of external revenue of reportable segments divided by the total external revenue and then times with 100%. By referring to our business MDRB, the combination of the revenue from the industrial segments, motor segments, and UMW segments come to 70.078 million ringgit, which when divided by the total external revenue of 70.061 million ringgit results in 100.024%. Since this is clearly exceeds 75%, the requirement is met.
The primary purpose of detailed segmental reporting under MFRS 8 is to provide financial statement users with clear, disaggregated data. One of the key benefits of segmental reporting for financial reporting users is enhanced flexibility and accuracy. Presenting data by segment increases the flexibility and accuracy of financial analysis, allowing users to tailor their valuation models and risk assessments to specific businesses' lines.
The primary purpose of detailed segmental reporting under MFRS 8 is to provide financial statement users with clear, disaggregated data. By referring to the table, segmental reporting helps financial statements users make more informed decisions. By showing performance across different business segments like industrial, motors, and UMW and others, users can better understand which areas contribute most to the Sime-Darby's overall result. This transparency supports smarter investment and management decisions.
Good day everyone, my name is Natira and I will briefly explain about MFRS 134, which is the Malaysian Financial Reporting Standard on Interim Financial Reporting. According to paragraph 4 of MFRS 134, an interim period is a financial reporting that is shorter than a full financial year. An interim financial report means a report that contains either a complete set of financial statements as described in MFRS 101 or a condensed set of financial statements prepared for that interim period. In simple terms, MFRS 134 set out the minimum content recognition and measurement principle for interim reports. For example, quarterly or half-yearly reports. So the main purpose of this standard is to ensure that companies provide timely and reliable financial information between their annual reporting periods so that investor and creditor can better understand the company's performance, financial condition, and liquidity. Next, for Part B, Question 2, on 30th May 2025, the group completed the partial disposal of a 23% equity interest in UMW Toyota Material Handling Sdn Bhd, in short term UTMH, reducing its stake from 74% to 51%, making the change ownership structure. This event is highly significant because it brought in net proceed from disposal RM2 to 5 million, increased the cash flow and strengthens the group's liquidity for future investment. Also, there is impact on non-controlling interest when the reduction in ownership increased the share of profit and net asset attributable to non-controlling interest in the future. From a financial reporting perspective, according to MFRS 134 Interim Financial Reporting, such a transaction is classified as a significant event and transaction under Para 15 that must be disclosed in interim financial statements. This effect on statement as there is increase in cash and cash equivalents when the group's cash position improved by RM2 to 5 million, strengthening the liquidity. Also, there is a possible gain on disposal as the premium on disposal of RM52 million that can be recognized as a gain, improving retained earnings or reserve. And the effect on performance arises when there is a potential for improved return on asset. If the cash received is invested in higher return projects, overall performance could be improved.
As stated in Note A11 interim reports, Samdarbi disposed of its entire equity interest in UKHE subsidiaries to Komatsu Limited on October 24 at 292 million ringgit. This is significant because when the subsidiary exit the group, changing its composition, the NCI related to UKHE was removed and the gain disposal was transferred into retained earnings. The disposal of UKHE affected financial statement and performance. In the statement of financial position, the UKHE asset and liability were removed, but there is a cash increase by 292 million ringgit. In the statement of profit or loss, the gain on disposal of RM 1 million was recorded. Meanwhile, in the cash flow, there's an inflow of RM 292 million ringgit in investing activities. Lastly, in the statement of changes in equity, the retained earning was up and the NCI were removed, making the group's equity balance change. Using Samdarbi Q4 current year interim reports, the interim reporting period for the current and comparative year are as follows. The statement of financial position is prepared as at 30 June 2025 compared to 30 June 2024. Next, for the statement of profit or loss and other comprehensive income cover Q4 ended 30 June 2025 compared to Q4 ended 30 June 2024. For the statement of cash flow and statement of changes in equity span a full financial year from 1st July 2024 to 30 June 2025 compared to 1st July 2023 to 30 June 2024.